the opportunity to ask a question directly, subject to available time. Participant will receive an e-certificate and speaker's material after submitting the feedback form that will be shared in the chat room after the webinar. Participants also do not need to confirm their presence via chat so that the screen is not disturbed. So once again, I ask participants that do not need to confirm their presence via chat box so that the screen is not disturbed for our mutual convenience. Thank you. Once again, welcome to the participant who already joined this Zoom room for this morning webinar. Participants do not need to confirm their presence via Zoom chat so that the screen is not disturbed. And once again, I ask the participant not to turn on the microphone for our mutual convenience. Thank you. Good morning, distinguished guests, ladies and gentlemen. Good morning, distinguished guests, ladies and gentlemen. We are delighted to welcome you to international webinar on taxation with theme Indonesian Tax Administration Reform, Lesson Learned and Future Direction, held by Tax Education and Research Center, University of Indonesia, in collaboration with DDTC Fiscal Research. Allow me to introduce myself. I am Lenida Ayumi, researcher at DDTC, and I will be your master of ceremony today. Would like to express our sincere gratitude to the Honorable Bapak Suryo Utomo PhD, Director General of Taxes, Ministry of Finance, Republic of Indonesia, Ibu Dr. Beta Yulianita Gitahari, Acting Dean of Faculty of Economics and Business, University of Indonesia, Bapak Darussalam SAMSE LLM in Tax CA, Managing Partner of DDTC, our honorable speakers, Professor Adrian Sawyer from University of Canterbury, New Zealand, Bapak Dani Septriadi SAMSE LLM in Tax, Senior Partner of DDTC, Bapak Dr. Yon Arsal, Assistant of Minister for Tax Compliance, Ministry of Finance, Republic of Indonesia, and all distinguished participants who have joined in Zoom room and TERC YouTube channel. From the report I received this morning, there were nearly 2,000 registrants from within Indonesia and abroad that already applied to join this webinar. Very incredible. Before we begin, to proceed with this webinar in orderly manner, I should beforehand inform the rule of this webinar for all participants again. Participants are requested not to activate their microphone during the webinar. And then participant may ask question to the speaker using Zoom or YouTube chat room by mentioning name, institution of origin, and also the question. Ladies and gentlemen, to begin this webinar, please join me in welcoming the Acting Dean of Faculty of Economics and Business, University of Indonesia, Ibu Dr. Beta Yulianita Gitahari, to deliver her welcoming remarks. To Ibu Beta Yulianita Gitahari, the time is yours, Ibu.
Still unmute, Bu Beta.
Oke, thank you Ibu Lani. Assalamualaikum warahmatullahi wabarakatuh. Very good morning to all of you. First of all, I'd like to welcome our distinguished speakers, Bapak Darussalam, SA, MSE, LLM, International Tax CA, the Managing Partner of DDTC, Ibu Christine Chen, TRC FEBUI Coordinator, Professor Adrian Sawyer, University of Canterbury, New Zealand, Bapak Dani Septriadi, SA, MSE, LLM, International Tax, Senior Partner of DDTC, and Bapak Dr. Yon Arsal, SA, AK, MSc, MAC. Assistant for Minister for Tax Compliance, Ministry of Finance, Republic of Indonesia, and distinguished ladies and gentlemen and all participants of today's webinar. On behalf of Faculty of Economics and Business, Universitas Indonesia, it is my pleasure to welcome all of you to this webinar. I thank you, TERC, Tax Education and Research Center, FEBUI, and DDTC Fiscal Research for organizing this webinar. I also thank you for all of you here joining with us, Professor Adrian Sawyer from Canterbury University, Christchurch, New Zealand, and Dr. Yon Arsal from Ministry of Finance. Today's webinar, Indonesia Tax Administration Reform, Lesson Learned and Future Directions, brings scholars, practitioners, and policymakers to share views and discuss policies on tax administration reform, specifically lessons from tax administration reform in New Zealand and Australia, mirrored to Indonesia tax administration reform. Improvements on tax administration policies surely and ideally become a priority in most countries, as most of government revenue comes from tax revenues. In Indonesia case, for the last 5 years, tax revenue funding of around 68% of government expenditure in state budget. Improvement on tax administration, ensuring ease of administrating taxes and compliance, need to be viewed as part of creating an effective tax system. In this period, when tax revenue declined from economic downturns, there is more pressure to rethink of a better tax administration system. In this context, we learn of what we have done by the Indonesian government, capture experiences and lessons from other countries, and identify as well what policy approaches that best work in general and for the cases of individual countries. This international webinar is intended not only for academics, but also targeted practitioners and policymakers. Discussion across parties are needed for an effective policy design and its implementation. In this context, going back, TRC FEBUI is established in 2018 as part of our commitment from Faculty of Economics and Business, Universitas Indonesia, to share to general public on taxation issues and policies, and to drive more research and taxation among multidisciplinary scholars. Finally, I would like to remind you all to stay safe to all of us, and let's enjoy this webinar. Thank you very much. Wassalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you, Ibu Beta Yulianita Gitahari, for the welcoming remarks. Coming up to our next agenda, it is a great pleasure for me to introduce the Managing Partner of DDTC, Bapak Darussalam, to deliver his welcoming remark. Bapak Darussalam, the time is yours, Bapak.
Unmute, Pak. Unmute, Pak.
Sorry.
Ya, unmute.
Yeah, please, Pak Darus.
Oke, thank you, Ibu Lerida Ayumi. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam.
The Honorable Director General of Taxes, Ministry of Finance, Bapak Suryo Utomo, PhD, and the Dean of the Faculty Economics and Business, Universitas Indonesia, Ibu Dr. Beta Yulianita Gitahari. I would like to express my thank you to all speakers, Assistant of Minister for Tax Compliance, Ministry of Finance, Bapak Yon Arsal, PhD, and Professor Taxation from the University Canterbury, New Zealand, Professor Adrian Sawyer, and my colleague, DTT Senior Partner, Bapak Dani Septriadi.
Thank you, Pak.
Good morning, Pak.
Good morning.
I would also like to greet the coordinator of Tech Education and Research Center of the Faculty Economics and Business, Universitas Indonesia, Ibu Christine Chen. Good morning, Ibu Christine Chen.
Good morning, Pak. Thank you.
And all participants, ladies and gentlemen. Good morning.
Thank you.
I am honored to deliver the welcoming remark at the international webinar on taxation entitled Indonesia Tax Administration Reform, Lesson Learned and Future Direction. The international webinar on taxation is the first collaboration between DTC Fiscal Research and Tax Education Research Center of the University of Indonesia. This collaboration is encouraged by our strong needs and commitment to promoting public tax literacy. The topic of the webinar, namely tax reform, is among the most essential and strategic topic for the Indonesia tax sector development agenda. I believe that the better tax system design, including effort to reform and administrative improvement, must include aspects of education and research in the tax sector. Furthermore, discussion on the tax reform agenda should also be undertaken in transparent and participatory manner. Therefore, I have great expectation that the strategic collaboration between DTC, Fiscal Research, and Tax Education Center, University of Indonesia, may continue in the long run. Finally, allow me to congratulate you for attending the seminar and discussion. I strongly hope that this webinar may contribute to a better Indonesian tax system. Thank you. Waalaikumsalam warahmatullahi wabarakatuh.
Thank you, Pak Darussalam.
Warahmatullahi wabarakatuh. Thank you, Bapak Darussalam, for the welcoming remark. Distinguished guests, ladies and gentlemen, without further ado, let us now watch the recorded keynote remarks by the Director General of Taxes, Ministry of Finance, Republic of Indonesia, Bapak Suryo Utomo.
Assalamualaikum warahmatullahi wabarakatuh. Salam sejahtera untuk kita semua. Om Swastiastu, Namo Buddhaya, salam kebajikan. Dean of Faculty of Economics and Business, Universitas Indonesia, Dr. Beta Yulianita Gitahari, Managing Partner of DTC, Mr. Darussalam, Professor Adrian Sawyer from the University of Canterbury.
Videonya belum muncul, sorry, videonya belum muncul, Mas Fahmi.
Ya, Bu.
Assistant Minister for Compliance,
Share-nya mati, Bu.
Mr. Yon Arsal. Participants, ladies and gentlemen. I would like to begin by expressing my appreciation to the Faculty of Economic and Business, Universitas Indonesia,
Aduh.
Sorry for the inconvenience. We have technical issues. We should repeat again.
Aduh. I'm sorry.
Warahmatullahi wabarakatuh. Salam sejahtera untuk kita semua. Om Swastiastu, Namo Buddhaya, salam kebajikan. Dean of Faculty of Economics and Business, Universitas Indonesia, Dr. Peta Yulianita Kitahari, Managing Partner of DDTC, Mr. Darussalam, Professor Adrian Sawyer from the University of Canterbury, Senior Partner of DDTC, Mr. Denny Septriadi, Assistant of Minister for Tax Compliance, Mr. Yon Arsal, participants, organizing committee, ladies and gentlemen. I would like to begin by expressing my sincere appreciation to the Faculty of Economic and Business, Universitas Indonesia, and Denny Darussalam Tax Center for organizing this international webinar on Indonesia tax administration reforms, lesson learned, and future directions. Before I share the DGT's experience in tax reform, allow me to borrow JFK's quote in 1963. For time and the world do not stand still. Change is the law of life, and those who look only to the past or the present are certain to miss the future. Ladies and gentlemen, indeed, we cannot avoid changing ourselves to keep up with the ever-changing world. That also applies to our tax administration system. Tax reform is our response to transform the tax system thoroughly, adapting to our stakeholders' necessities from both policy and administrative perspective. Historically, the first comprehensive tax reform in Indonesia was introduced in year 1983 by the implementation of self-assessment system under several new tax laws, general provisions, and tax procedure, what we call KUP, income tax law, what we call PPH, value-added tax law, we call it VAT or PPN, land and building tax, we call it PBB, and stamp duty law, we call it Bea Materai. Following the first policy reform, we had our law and bureaucracy reform back in 1991 to 2001, just before our second comprehensive tax reform to the tax modernization. In year 2002, we began our attempt for modernization by establishing the large taxpayer office, we call it LTO, and then modernized all of the tax law offices located throughout Indonesia until 2008, including the regional offices and the headquarters. Alongside the organizational restructuring, we also started to redesign our business processes and revise the tax laws as part of our holistic reform agenda. Ultimately, the Sunset Policy Program in the year 2008 was the terminal point of 2002 tax reform agenda. To maintain the reform spirit, we focused on improving DGT's internal control during 2009 until 2014 period. Ladies and gentlemen, external environments have nowadays been moving and changing very rapidly. Tax reform agenda needs to be continued, especially in response to the following unexpected conditions. Tax ratio tends to be stagnant, compliance rate, both formal and material, is not yet optimal, and target realization for the past 10 years has always been below 100%. As a result, we initiated the latest tax reform plan immediately after the consolidation program, the tax amnesty. Also as a part of our new compliance regime based on mutual trust and taxpayers' engagement. In short, as the next monumental tax reform, we have designed the program to further strengthen DGT in delivering services as well as collecting tax revenue through 5 pillars of reform: organization, business processes, human resources, regulations, and IT and database. While the organization and human resources pillars will create a more robust DGT, the regulation pillar will make a more adaptive tax system that fosters the business environment. Subsequently, altogether, the business process, IT and database reform will be the hallmark of this reform agenda, integrated and implemented under the Cortex system. Ladies and gentlemen, the technology pillar of IT reform has been an integral part in our previous tax reform agendas, especially the development of Sistem Informasi Perpajakan, we call it SIP, to complement in 1983 reform, and the Sistem Informasi Direktorat Jenderal Pajak, we call it SIDJP, following the 2002 reforms. Equally important, the wave of digital transformation across various aspects of our life in recent years aggravates the needs of a more capable and reliable IT systems. The ongoing digitalization of our economies and societies will not stop. Thus, we must be ready to face it with all of its following consequences. In response to such challenge, we are accelerating our planned tax reforms primarily on the development of Cortex System, a tax administration information system with a new technology platform, covering the whole core functions of our tax administration, which consists of registration, payment, tax return submission, supervision, audit, investigation, collection, objection, and also appeal. Our aim is to provide user-friendly and web-based services to taxpayers and to simplify our business processes, which we have developed into an IT framework that consists of 3 main targets. The first target is for DGT to migrate the digital ecosystem. In order to do so, we have established several digital channels that can be easily accessed and used by taxpayers to fulfill their tax obligation, namely e-filing, e-billing, and e-reporting system with pre-populated data. We also established a natural system to capture taxpayer transaction by implementing electronic invoice system, such as VAT invoice, withholding tax invoice, and e-stamp duty, as well as a pre-populated filing system. Other than those mentioned, we also implement compliant risk management system, a risk-based enforcement approach using event-based, detailed, and current data that can be used to increase tax compliance effectively while preventing non-compliance based on the behavior of taxpayer. The second target is to establish an integrated and interactive tax system for both taxpayer and tax officers. We provide automation process to enhance services and compliance activities by introducing CCC or click, call, and counter program to interact with taxpayer, digital audit working papers, the taxpayer accounting system. Moreover, we also making collaboration with third parties in providing digital services to broaden service penetration and to make taxpayer easy to comply by connecting our system to digital service providers, banks, communities, and other institutions. The last target is to establish a digital auto-regulating ecosystem. We develop a unified digital ID called Kartin One to be used across the organization to make sure that a verified identity is embedded in a transaction, establishing data governance framework to make sure that data flows seamlessly. Data is embedded with verified identity, and data integrity is maintained through built-in continuous feedback loops, and establishing a system based on accurate data in order to drive taxpayers to fulfill their entitlements properly with less intervention. Ladies and gentlemen, undeniably, since the first extensive tax reform in 1983, we have learned that a comprehensive reform encompassing both policy and administrative areas will give a significant boost in revenue collection. However, we also need to maintain the reform time frame to keep up with the ever-changing business dynamics and taxpayers' demands. In other words, tax reform is not a one-time program, but a continuous process that is an indispensable feature of DGT. At the same time, in order to implement a successful reform program, stakeholder engagement is crucial, not only from the taxpayers, but also various parties, including academicians, practitioners, to ensure a more holistic reform agenda. Therefore, I hope this seminar will produce constructive and insightful feedbacks for our current reform program, as well as input for the tax reform in the upcoming years. Thank you. Wassalamualaikum warahmatullahi wabarakatuh. Om Santi 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 Om. Namo Buddhaya.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you, Bapak Suryo Utomo, Director General of Taxes, Ministry of Finance, Republic of Indonesia, for the keynote remarks and enlightening speech. From the remarks from Pak Suryo Utomo, we can show that there have been countless efforts made by the Indonesian government to reform tax administration system in Indonesia, and the effort is continuous until now. Before we continue to the next agenda, I want once more to remind all participants to not confirm your presence in the chat box in order to not disrupting the share screen. Thank you for your cooperation. Ladies and gentlemen, we will now proceed to our main agenda, the plenary session, that will be led by our moderator, Ibu Christine Chen, SAAK Tax CA. First of all, allow me to introduce our moderator. Ibu Christine is a lecturer at the Department of Accounting, Faculty of Economics and Business, Universitas Indonesia. She is an Australian Development Scholarships awardee and received her master's degree in international taxation from the University of Sydney, Australia in 2006, and Bachelor of Accounting from Faculty of Economics, University of Indonesia in 2000 with cum laude title. Prior to serving as a lecturer, she joined KPMG Jakarta at the Tax Consulting Division. Ibu Christine is a tax expert who has been involved in several research projects and training related to Indonesian taxation and financial accounting. She is also actively engaged in the tax accountant compartment of the Indonesian Accountant Institute, or IAI. In 2015, she was officially appointed as the Associate Director for Administration and Finance of LPEM FEBUI, and she has also served as the Coordinator of Tax Education and Research Center, atau TERC, FEBUI since 2018. Ladies and gentlemen, without further ado, please help me welcome our moderator, Ibu Christine Chen. The time is yours, Ibu.
Okay, thank you, Ayumi. Good morning, ladies and gentlemen. How are you today? Hopefully, I wish you all be happy and healthy. Yeah. Today, we will discuss a very interesting topic regarding the tax administration reform. As we know that the tax plays an important part for the countries, especially for Indonesia. Almost the government expenditure is financed by the tax revenue. So it is very important for us to analyze and to discuss about the tax administration reform, because it will influence the tax compliance of all the taxpayers. So today we will discuss deeply about the tax administration reform from several aspects, and we are so grateful today that we have here with us several prominent speakers. Our first speaker is Professor Adrian Sawyer from University of Canterbury, New Zealand. But firstly, I would like to share his CV to all of us. Okay, I will share the screen. Okay, yeah. Dr. Adrian Sawyer is Professor of Taxation, and he is previous Research Director for the University of Canterbury Business School, and he holds a Doctor of Juridical Science from University of Virginia, MCOM, BCom, and LB degrees from UC, and his professional membership are CAA NZ, CPA Australia, and also Barrister and Solicitor of the High Court New Zealand. He is chair of the editors of the New Zealand Journal of Taxation, Law and Policy. This is the A-Rank journal, and on numerous editorial boards. And he has been a consultant for New Zealand Inland Revenue and also the New Zealand Treasury. And he has 30 years experience as an academic for teaching, research, and also surveys. And his research interests include the tax administration, compliance, and international taxation. So today, Adrian will share with us regarding the tax reform from Australasian perspective. So without further ado, I would like to invite Adrian to share with us regarding the topic. Adrian, the floor is yours. Thank you.
Thank you very much. I will just shortly get my slides up on the share screen. Okay, just checking with everybody that you can see my slides.
Yes, Adrian, we can.
Okay, thank you very much. Well, thank you, Christine, for that welcome, and it's a pleasure and delight to be able to talk to you.
Sorry, Adrian, please unmute.
Okay, I think, yeah. Okay, well, thank you, Christine, for the introduction and for the invitation to talk to you today about tax reform from an Australasian perspective. what I'll do is I'll get underway and do my very best to get through what I want to talk about in the next 30 minutes. So what I plan to do is give a little bit of background to what's happened in Australia and New Zealand and focus particularly on the significant tax reforms in 6 different areas. So the first of them is what's been done in terms of the tax gap, then what's been done in terms of the tax law rewrites, look at the reviews of the overall tax system that have been undertaken, research into compliance costs, the digitisation of taxation, and a little bit of a look at taxpayers' rights. I'll then try and bring that all together with some concluding observations. Now, at the end of my slides, which are going to be made available later, there is an extensive bibliography of all the papers, chapters, etc. that I refer to, so they'll all be there for further reference. Now, I won't need to go through the next slide as Christine's used this material, so I'll go straight on to my introduction. So Australia and New Zealand are very similar in many respects, not just their geographical location, but particularly in their approach to tax administration, tax compliance, and tax reform. One of the things they both have in common is a low perception of corruption. And in the 2019 Transparency International Index, New Zealand was first equal, that is the lowest level of perceived corruption. Australia came in at 12th and Indonesia at 85th. So that says something about here that there is a high degree of trust in the country, in officials, etc. Over the last 30 years, there have been major projects looking at how to reduce the gaps in the tax bases of both Australia and New Zealand. Both have looked to rewrite their income tax legislation. Both have undertaken reviews of their tax system. Both have undertaken to measure compliance costs and how they might be reduced. And both have looked at how to strengthen the integrity of their tax systems, but generally speaking, have not done a lot in terms of enhancing taxpayers' rights. But to be fair, Australia has done more in this regard than New Zealand. Okay, moving on to some comments about tax gap. Now, excuse me, tax gap is quite a difficult subject to talk about in the sense that different people have varying perspectives on what it might mean. So Gemmell and Hazeldine in 2012 commented that we argue that all the conventional estimates of the tax gap are likely to be unreliable because they ignore behavioural responses that could be large. And by ignoring this, as the literature does, then you've got a major problem. They suggest that there is only one method that you can use reliably, and that is what the US does through the IRS with their taxpayer compliance data project. So again, they say that this provides the best estimate, but it might be a lower bound because there will still be some information that's left out. So what most countries tend to do is rather than try and accurately measure the tax gap, they try and look at what is their hidden economy, and from that try and draw what they might be missing out on. So a study was done in New Zealand by Giles in 1998, who estimated the hidden economy varied between 6.8 and 11.3% of measured GDP, which then implied that the tax gap, based on his criteria, was in the order of 6.4 to 10% of total tax liability. So quite sizable potentially. In Australia, the Australian Tax Office uses a different approach. They measure it by the difference between the amount they actually collect and what it would have collected if every taxpayer was fully compliant. And this varies across the different tax types. So in one year where I could find some data, 2015-16, they estimated the total tax gap in Australia was 29 to 31 billion Australian dollars, or between 7 and 8% of GDP. So again, reasonably similar to the estimate for New Zealand, although New Zealand's was much older. Neil Warren in Australia has put together what I think is a very useful way of looking at tax gap. And in the diagram that's provided on the slide, you can see the box called actual collection. So based on your current compliance level and your current policy structure that the government has chosen, that will give you the collections you're making. And then the gap can be divided into 2 parts. A compliance gap, which is the gap in terms of having 100% compliance and what you're getting, and a policy gap. So that means some of your tax gap is actually due to your choice of tax policies, not necessarily just taxpayers not complying. And so when you look at it, that he makes the comment that what tax gap estimates do is transparently link tax policy design, revenue administration performance, and taxpayer behaviour to broader questions of economic growth, fiscal sustainability or funding the government, and fiscal effort and capacity. One of the issues he says it does raise is questions about your data and its integrity, which is always going to be a potential concern. And it gives you insights with economic, social, political, and institutional origin. So I think this more expanded measure can give very useful insights. Okay, moving now to have a look at the tax law rewrites, firstly from New Zealand. Now, what I'm talking about here is in the context of the rewrites that occurred in Australia, New Zealand, and the United Kingdom. Of these three countries, New Zealand was the first to commence in 1993. This followed a recommendation back in 1992 that there needed to be a simplification review. So what New Zealand did first was to take its existing statutes and just reorganise the material into three new statutes to create an Income Tax Act, Tax Administration Act, and a Taxation Review Authorities Act. And after it did that, it progressively went about rewriting what's known as the core provisions, or those that are the main essential taxing provisions. Then it rewrote parts A to E and Y. If you're interested, part Y is where all the definitions are, and created the new Income Tax Act 2004. Then they rewrote the remainder of the Act and created a new Income Tax Act 2007, which is the current version we have. Very importantly, though, they did not rewrite the Tax Administration Act, Taxation Review Authority Act, or our Goods and Services Tax Act. And that's very disappointing. Also, we did not address what's called the Big P policy issues. The idea was that the policy should remain unchanged. We did have a rewrite advisory panel that would give feedback in terms of each issue if there was considered to be policy changes. And some research that I did in 2007 suggested that there was some improvement from this rewrite in terms of the readability. And there's some very useful insights by Sir Ivor Richardson, who's a retired judge who also chaired the rewrite advisory panel. I'll talk more about that in a moment. So you may not be able to see very clearly, but this diagram is called the generic tax policy process. And this is unique to New Zealand. And what it largely does is give a very clear process of how broad economic and fiscal strategy is developed, how you develop a revenue work program on a rolling basis, how you then detail the policy design, put it out for public consultation, get feedback, then draft the legislation. The draft legislation goes out for feedback, amendments are made, then it's passed into law through the parliamentary process. And then importantly, there is a post-implementation review to pick up any remedial issues and then go back through the process. And it shows where there can also be external input into the process. So it might look complicated, but it does work very well in New Zealand. Okay, moving on to Australia. Australia commenced in 1994 their tax simplification task force to create what was called the Tax Law Improvement Project, very similar to New Zealand. They rewrote, rather than by parts of the Act, based on various regimes, created a new Income Tax Assessment Act of 1997 and left everything that wasn't rewritten in their old Act. However, after about 4 years, they then started reviewing the tax system and a lot of this got left behind. However, to show you the value, in 2006, they managed to get rid of 4,000 pages of redundant provisions. So that in itself is a very important outcome. 2009, they got back underway again, aiming to finish by 2013. However, while they continue to make progress, even as 2020, where we are now, there are still some parts of their legislation that are yet to be written. So you could argue they still haven't quite finished. What can we say generally about tax law rewrites? Bintran Nam, back in 1999, said you can look to do two things. You can look to have legislative simplification, which is what happened in Australia and New Zealand and the UK, or what's called effective simplification. So you make it easier to determine tax liability, which therefore reduces costs of compliance. Unfortunately, none of the countries took this approach. What also happened is at the same time, there were other tax reforms, so more complexity was added. However, what Richardson, who I mentioned before, is a retired judge, said that to have it as effective as possible, you need a collaborative process, high quality control, clear goals, committed experts and officials. And generally in his view, and he could see this as chairing the Rewrite Advisory Panel, New Zealand did pretty well there. However, we learn a lot from hindsight. We should have done more planning. We should have incorporated the big policy issues. We should have possibly reduced the expectations and focused more on compliance cost reduction. So what these projects show is there was a lack of clear policy intent. There was still a lot of detail in the legislation, notwithstanding the rewriting. And maybe it would have been better in some cases to use principles rather than more detail and provide more administrative guidance. So it raises the big question, should the rewrites go to the other legislation? My view is yes, so long as you avoid the pitfalls and recognise they all took longer than planned. New Zealand planned 5 years, it took 15. The UK took 16, Australia 25 and still going. They all took a piecemeal approach, not a big bang, so they did it in stages. The scopes of the project varied. New Zealand was the narrowest, the UK the widest. Importantly though, they all had extensive consultation. So what are we doing now is we're now looking more at how to manage tax system complexity to make compliance easier. There seems to be no appetite for any further rewriting. And in some work that I did with a couple of colleagues, what we said is really important going forward is to actually identify what is called unnecessary complexity. There's going to be complexity in the tax system, but how can we get rid of that which is unnecessary? And there we set out 10 steps. So find the aims of the tax, look at different methods to achieve the aims, look at this in terms of economic criteria, administrative constraints, look at complexity, look at the risks that if you have unnecessary complexity, look at people's behaviour, look at the relationship between policies and their effects on complexity. Make sure you develop strategies to deal with this. Plan and implement the strategies, then monitor and evaluate performance. That is a lot to do, but it has the potential, we believe, to actually get rid of unnecessary complexity. Further research that I did in 2010 looked at how effective were the tax rewrites. And I've done it using readability formula, the close procedure, which is essentially taking a piece of text, taking out every fifth word, and seeing, in my case, students or practitioners can correctly replace the missing word. And the more that they replace correctly, the easier something is to read. And again, this showed that there were some improvements, but the big question is, do the benefits outweigh the costs? And at the moment, I can't give a definitive answer on that. Now, moving on to the third area, which is the review of the tax system. Australia did what's called the Henry Review in 2010. It was a massive review, but what came of it? It's largely gathering dust. Very few of its 138 recommendations were adopted. They weren't allowed, for example, to review the GST because of the complicated political system in Australia. So one doubts whether the whole project was worthwhile. New Zealand has had two working groups. It had one in 2009-10 and then one that just wrapped up last year. The first one was independently established by Victoria University of Wellington. Very successful, many recommendations accepted, possibly because it was aligned with the philosophy of the government at the time. However, the second one, it was established by the current government, but very few of its recommendations have been adopted. What is important is they had to use a new framework developed by the New Zealand Treasury called the Living Standards Framework. However, we're yet to see just how successful it will be. In a moment, I'll talk about another proposal I put together in a book that is coming out very soon about developing a permanent New Zealand Tax Review Commission that would do on an ongoing basis reviewing parts of the tax system. In another paper that again is going to be forthcoming soon, I look at this issue of how the Living Standards Framework has been applied. And when you look at this framework, what it will do is it incorporates things other than financial. So it looks at Te Ao Māori, which is our Indigenous people's perspectives, potentially Pacific people's perspectives, and this will lead to New Zealand having a unique set of policy principles. So we'll have traditional ones like your equity, simplicity, etc., but also those wider ones. So we're yet to see how that might work. So I mentioned that I've got a book coming out shortly that develops an idea of a New Zealand Tax Review Commission. This slide here shows the plan structure. So it would have a permanent board and a chair, a director, a secretariat to support it, a deputy director, some members, some would be temporary and seconded. It would draw on consultants from time to time. It would have direct links to the public, the media, but it would also report to our Parliament's Finance and Expenditure Committee. So it would be accountable to our Parliament. It would report but not directly be responsible to the Minister of Finance and the Minister of Revenue, to Inland Revenue and the Treasury. So the whole idea is to not just have these ad hoc reviews, but have a permanent body that is undertaking smaller reviews on a regular basis. Okay, moving on to my next topic, which is compliance costs. This is a very heavily researched area in Australasia, particularly from the 1990s to the late 2000s. And a lot of what I'm going to talk here was summarised in a presentation that was given by Professor Chris Evans at the University of New South Wales when he was a visitor at my university in 2016. It talks about administrative costs, so the public sector costs to the government, ultimately borne by taxpayers of administering and collecting taxes. But there are some costs that aren't counted in this, like the capital costs on buildings, the costs of developing tax legislation, the costs of tax dispute litigation and resolution. Generally, these are between 0.5% to 2% of the revenue yield, depending on taxes. And they are somewhere between 20 to 50% of the total compliance costs. Compliance costs are those costs, monetary and time, that taxpayers incur in complying with the tax system. In a way, if the taxes disappeared, then these costs would also disappear. They include the time you spend yourself or unpaid helpers, the monetary costs on advisors, incidental costs, and the one that's very hard to measure is psychological costs, stress and anxiety. And compliance costs make up computational costs, planning costs. You have your inevitable costs that you can't get away from. There might be costs that you can prevent. There's monetary and psychological, transitional as you change your taxes, and recurrent costs. There's our social tax compliance costs, the cost of society. The fact is that you are having opportunity costs of putting resources into some things and not other areas. However, sometimes there are managerial benefits from compliance in the sense that a business might have better records that helps it do its planning. What this is getting at is that compliance costs are not simple to measure. They have lots of drivers, but we do need to look at them carefully. What does the research find in Australasia and further afield? These costs are significant and high, 2 to 10% of revenue yield, up to 2.5% of GDP, and importantly, much larger than the administrative costs that the Revenue Authority incurs. These costs are extremely regressive. That the smaller the business is, they have a disproportionately higher burden. And this is very evident with VAT or GSTs. We find that over time, the costs are not diminishing significantly. Yes, there has been some reduction, but they're still large. And there's been over 100 major studies done worldwide since 1935. And these include doing them across different countries, between developed and developing nations, across different taxes and types of taxpayers and different methodologies. All of them give the same type of results. They're not diminishing significantly and they are regressive. Where do we find our compliance costs? Well, some are within the control of government in terms of protection of tax revenue, the law they use, the distinction between taxes and transfers, broadening the base, the frequency of law changes, etc. So those things they can alter. Some are within the control of government partially. That is, do you have an adversarial tax culture like we do in the Western world? Growing complexity of the economy. And then there's those outside the control of government. Household preferences to minimise tax. Tax practitioners' preference sometimes for complexity. And of course, aggressive tax planning. How can a government respond? Well, it can adjust the tax policy settings in terms of how it deals with thresholds, simplifying rules, getting rid of preferences, etc. It can look at this equity simplicity trade-off. The more you tend to try and make something more equitable, the less simple it is. The more you try and make something more simple, it can become less equitable. So that's a very difficult trade-off. There's also the trade-off between should the Revenue Authority incur the costs or should the taxpayers? And given that most governments are trying to reduce their costs, this forces revenue authorities to pass costs on to taxpayers and maybe also have less frequent change in the law and be more consultative in the process. How have tax administrations responded? Some have re-engineered government processes, reduced filing, implemented taxpayer-centric approaches, making greater use of technology, and that's really important everywhere in the world, optimizing use of third-party information like pre-filling, and redesigning compliance interventions in terms of their risk. Okay, another important feature is what's called a regulatory or compliance cost impact report or statement. Depends, different names in different countries. I did some research back in 2002 that looked at New Zealand compared to some other countries. And what I found there is that the New Zealand statements in theory were one of the best performing ones compared to other countries, but they had a major problem. That is, they didn't actually include any quantitative analysis. So they might tell you, we expect compliance costs to go up or go down, but there would be no estimate of what that dollar or percentage impact might be, which is what we're all very interested in doing. And since that time, there's been very little improvement. So there's a lot of discussion about what they think the impact is, but very little modeling to show what it might be in terms of dollar terms or percentage terms. More recently, Inland Revenue in New Zealand and others are starting to look at the compliance costs of large enterprises. So they've focused on the small and medium. There's big issues. What is a large enterprise? How do you define it? What are the drivers and their composition? Do they differ from small and medium enterprises? And I had a PhD student who completed his PhD last year looking at these issues and doing some preliminary research and finding it more challenging to do research in this area than with SMEs. And research that Professor Chris Evans led with a number of other colleagues in 2016, excuse me, gives a very good overview of an Australian perspective on large enterprise and compliance costs, but much more research intensive than where we've been able to get into in New Zealand. Okay, my next topic is looking at the digitisation of tax. And in New Zealand, we have what's called the Business Transformation Project, aiming to have secure digital platforms, streamlining all taxes, streamlining social policy with taxes, and having a new tax administration system. This is a multi-year project, somewhere around 8-9 years worth, and we're about 2/3 of the way through it. And it's trying to take New Zealand from a system that was built in the early 90s to one that's going to be useful going forward. So I'm going to make policy and legislative settings simplified, greater use of information, make it fit more seamlessly into people's lives, etc. And in their annual report, Inland Revenue in 2018, this is when the third release of the 4 releases came out, they admitted it was going to be the most complex and higher risk. And this is really important because if something went wrong, it could mean the tax system falls over, and that would be just devastating for the country. And the big concern they had here is integrating social policy with the tax system. There were some hiccups when it came in, and they have to keep doing reforms. One of the big 4 accounting firms, KPMG, has been doing an independent risk assessment. And their conclusion is Inland Revenue is doing all it can, but there are still considerable risks in this project, which has still got about another 2 to 3 years to go. What is the most important thing for taxpayers is what's called the MyIR platform. Every taxpayer will have their personal online account. But to use this, you need access to broadband and a reasonable degree of computer literacy. Not everybody's got that in New Zealand. This is important because Inland Revenue is getting rid of most of its offices. The telephone system fails to meet demand. And again, in their annual report, they talk about the fact that they don't answer. They only answered 64% of calls in 2 minutes. And by that time, a lot of people drop off anyway. So that is a huge concern that if you're moving to an online platform, can everybody use it? Okay, the last topic I'm going to talk about is looking at taxpayer rights and in New Zealand. Just a wee bit of context. New Zealand, you might be surprised, has no formal constitution and very few legislated taxpayer rights. It does have the issue of secrecy of your information, legal professional privilege that lawyers can give, a limited non-disclosure right that accountants can provide. It does have a comprehensive dispute resolution process, and you're allowed to use a tax agent. Excuse me. There's also very clear formalized taxpayer obligations set out in law, but there's no equivalent statement of taxpayers' rights. And I've put there Section 6 from our Tax Administration Act, which shows that the key thing about looking at the system is the integrity of the tax system. And in the couple of highlighted lines, talk about the fact that the Revenue Authority and the ministers have to think about taxpayers' rights in terms of having their liability determined fairly, impartially, and according to law, and that they, excuse me, have their affairs kept confidential. But there's not much else in terms of rights set out. There has also been new provisions being redrafted to give our Commission of Inland Revenue the ability to actually deal with a legislative anomaly. The concern there is that's giving an administrative official the ability to effectively fill in gaps in the law. Now, in New Zealand, Inland Revenue in 2001 created a charter. However, it's not a charter of rights, really. It is what I would call a code of conduct. So it's the way the revenue will deal with you. And in fact, it calls taxpayers customers. Now, you might know the old adage that the customer is always right in marketing. Well, when it comes to tax, that's not true at all. The customer is always wrong unless they can prove the revenue is wrong. So unfortunately, we don't have a clear charter. And in a paper that I wrote many years ago now, and it's still the case, we don't have a constitution protecting fundamental human rights other than a Bill of Rights, but nothing about tax. We have a very limited charter. So we have the risk that a government could come up and ignore fundamental taxpayer rights and there'd be no recourse. The only reason that we have not had that is that we've got an MMP political system, and it seems to prevent this sort of activity possibly happening. Some other commentators have got varied concerns. Denham Martin, who is a leading tax barrister, says that the tax system is out of balance because it doesn't recognise, protect the rights of taxpayers. So there needs to be improvement. Mark Keating, another tax barrister, when he has written the fact that in some respects, we rely upon the discretion and good graces of Inland Revenue officers to protect unwritten rights. But our tax administration remains robust and is generally recognised as such. So we seem to function okay, but it's a little bit risky. And our tax working group, the most recent one, recommended that there should be a taxpayer advocacy service to assist taxpayers. And the Office of the Ombudsman should have greater resources. And there should be a much simpler, truncated tax dispute process for small taxpayers. And in fact, in that tax working group, they had an independent report that essentially said there should be a deputy ombudsman looking after tax issues. There should be a much more affordable dispute process, that there needs to be a taxpayer advocate service like there is in the US. Furthermore, that there should be the ability to get assistance from the service where you've got small tax disputes, and that you should be able to still use your appeal rights, that this tax advocacy service would report to the Finance and Expenditure Committee, and that there should be an investigation into having a formal taxpayer Bill of Rights like in the US. So potentially would have been good changes, but nothing's happened. So how do I summarise things for New Zealand? Poor history of legislating for rights, focused on administrative statements. The system's weighed hugely in favour of inland revenue. Parliament seems to be happy with this because it generates revenue. Taxpayers haven't really challenged very successfully. But what is very important is we're very low on the corruption perception index, so there's a high degree of trust of officials. In terms of protection for rights, I said the Ombudsman can investigate some things, but not a lot of other things. We don't have any specific body that looks at systemic issues, unlike Australia, where they have an Inspector General Tax Office and a Tax Practitioners Board. So again, Australia does things better than New Zealand. And Australia's had an investigation into taxpayers' rights. And one of the interesting things there, which I've highlighted, is there is a right to seek compensation for defective advice. That would be wonderful if you could do that in New Zealand, but it's not possible. However, there are impediments to taxpayers enforcing their rights, which is again a similar issue that we have in New Zealand. So to conclude, what have I said about tax gap? Only the US undertakes rigor and reliable research. The estimates are quite large, but we've focused on the hidden economy, trying to plug gaps. The tax law rewrite, you need to address the big policy issues. New Zealand and Australia didn't do so, so not really any effective simplicity. The reviews of the tax system have not produced much at all. Maybe we need a permanent oversight body. There's been a lot of research on compliance costs. We know they're regressive. There has been some reduction. There should be a preference for administrative costs over compliance costs, but that's not what the government's want to do. In terms of digitisation of tax, New Zealand has done a lot of work here, and we've got the biggest IT project ever in New Zealand's history underway, but a lot of risks. And in terms of taxpayer rights, New Zealand doesn't have a lot of protection. There's no oversight body, and digitisation is actually increasing the risks. However, the good news is at least we have effective tax administrations, and there is a low perceived level of corruption. And at that point, I've finished my presentation. Apologies for going slightly over time, and I'll now stop sharing my slides.
Okay, thank you very much, Adrian. Very interesting presentation. Thank you so much. So, ladies and gentlemen, Bapak Ibu, from Adrian's presentation, we can get several points like Adrian discussed about the tax gap, the tax law rewrite, which Indonesia also under the process of the tax law rewrite, and about the review of the tax system. Maybe we can also learn how about in Indonesia, whether we have that structure organization like Adrian's proposed in regarding the review of the tax system. And also, interestingly, it's about the compliance cost. It's I think it's a never-ending research topic. Yeah, so many in the research conducted related to the compliance cost, and I think it's also become the major issue in Indonesia as well. So maybe we can learn from what happened in Australia and also New Zealand. And the other thing which is interesting is also the digitalization of tax. I think Pak Yon will share with us later this afternoon regarding the digitalization of tax in Indonesia, the Cortex System in Indonesia. Adrian also discussed about the digitalization of tax and related also to the risk which perceived in the related to digitalization of tax. And there is a question also whether can everybody do it? Can everybody use it? Yeah. And the last one is regarding the taxpayers' right. This is also very interesting, which will be continued with our second speaker. I would like to introduce our second speaker, Bapak Dhani Septriadi. Pak Dhani Septriadi, I will share the CV first. Okay. Okay, so this is the curriculum vitae of Pak Dhani Septriadi. Pak Dhani Septriadi is the senior partner of DDTC, and his specialization is international taxation and transfer pricing. And he is one of the Indonesian recognized as the world leading transfer pricing advisor for 2 consecutive years by International Tax Magazine Expert Guides. Congratulations, Pak Dhani. And also he was experienced in arbitration disputes as an expert at International Chamber of Commerce in London, United Kingdom. With his capacity, Pak Dhani was asked several times to provide his experts insight into the tax court to explain the transfer pricing cases. And he also teach master accounting program, international tax, my co-teaching in University of Indonesia. And he's graduated from University of Indonesia, the master degree in tax policy and administration, and also the master degree in international tax law, Vienna University of Economics and Business Administration, Austria. So that is my presentation about the Pak Dhani curriculum vitae. And Pak Dhani, I will give the floor to you now.
Okay.
Thank you.
Thank you, Bu Christine, for introduction of my CV. And thank you for Professor Adrian for the great presentations. I know you that you are experts in taxpayer rights. So this is my presentations about that I try to fit with the Indonesia situations. So in 2017, Pak Darussalam asked me to attend the International Taxpayer Rights Conference in Vienna. So this is the slides that I made. It is also includes based on my conference attendance at that time, and then also based on the books that I have researched, because taxpayer rights is my concern and Pak Darussalam concern also. So let's start the presentations. Maybe let's next slides, Pak Fahmi. Next. Okay, I would like to I would like to address about why taxpayer rights is important. Based on the OECD, that the taxpayers who are aware of their rights and expect, in fact, receive a fair and efficient treatment are more willing to comply. So based on these statements, that we know that if the taxpayers understand their rights, they are willing more to comply. And then this is also the changes of the revenue authorities to alter from the command control with the automatic application of penalties for various forms of non-compliance to a responsive service orientation designed to build trust, support, and respect in the community. So there is a trend in the revenue authorities move away from the direct penalty for the non-compliance, and then change to the service orientations that to build trust and then support and respect the community, that is the taxpayers. So the next slide. So there is a wisdom literature says that if you are going to tax people, make sure they know that they are doing something for the greater good, that the process is as painless as possible, and they don't feel that they are paying more than their fair share. So I think the wisdom is so memorable for me. That's why I put it in the slides. Next slide. So I directly present about the rights for the tax policy development and the making of law. The public or the taxpayers or all the stakeholders must know that is to ensuring that the changes to the law are predictable, necessary, and the tax is workable and does not impose excessive burden. So the government and then the parliament must publish their policy development and the making of law. So the Indonesia House of Parliament already published the draft of the general tax provisions. That's actually this is important for all the Indonesia tax shareholder, because the general tax provisions or the ketentuan umum dan tata cara perpajakan is about your rights and obligations. When we are talking about rights, then we have to follow with the obligations also. So this draft of the KUP or the general tax provisions is important for the all the tax stakeholders, because it's detail explaining about your rights and obligations. So it's mentioning about how you would like to be taxed. It's not how much, because how much is maybe is in the income tax and in the VAT, but it's how you would like to be taxed and how much the penalty imposed if you are not non-compliant. So I think it is important. It is a good development for in Indonesia that now they publish the draft of the tax law in the website of the Indonesia House of Parliament. Next slide. So this is a model of taxpayer charter made by practitioners. It's like that a taxpayer shall be presumed to be honest and truthful unless there is evidence to the contrary. Actually, the spirit of this is based on the self-assessment system. The self-assessment system is that that you calculate and then you report the tax liability based on the data that the taxpayers have, and then the tax authorities are able to check based on the third-party informations, and then from the confirmation from the third party or based on the data that they have. So unless the tax authorities have the evidence that the taxpayer is not comply, so it should be the taxpayers shall be presumed to be honest and truthful. Next slide. This is a binding ruling for a prospective or sometimes completed transaction. So this actually, if the country already select the self-assessment system for the basis for the filing the tax return, so there should be another rules about the binding ruling. The binding ruling is like the advance ruling. If the taxpayer would like to understand about their tax affairs, they would like to know about their transactions or their future transactions, they may ask to the government or the tax authorities about how about the interpretations of the transactions. So we hope that in Indonesia that we have clear deadlines for the binding rulings. We have the binding rule. The taxpayers in Indonesia are able to ask to the tax authorities, but at the present, the taxpayers actually need the deadlines for response of the binding rulings. Next slide. The audit process. A tax officer in the course of an audit or inquiry shall request from the taxpayer only information which is reasonably necessary and applicable to the matters under review. This is regarding the proportionality principle. That it is related also that based on the Indonesia is already adopted self-assessment system. So now in Indonesia, all the data is already integrated. Actually, now the tax authorities already are able to match all the data from the third party with the tax return. So it is easier now for the DGT to target it or to audit based on the audit plan, for example, because now they already have already how to match the VAT, for example. Before the audit, they already have the matching based on the e-factor or the e-VAT. And then now you already have the exchange of information data from the bank in the Indonesian bank or from the overseas. So now it is easier for the tax auditor or for the DGT to more targeted audited, and then no need to ask for a lot of data during the audit. A tax officer shall summarize the result of the audit or inquiry and provide reasonable length of time for the taxpayer to respond. In general, a 30-day period will be considered appropriate for such response. So based on my experience, the more the time for the taxpayer and the tax authorities have a time to discuss during the audit, the more dispute is will raise. In other words, that if you have time to discuss about fact disputed or question of law, and then how to reconcile the numbers or the invoice or something like that. So the dispute can be reduced. So no need to go to the appeal, that you have time to explain and then discuss each other. So based on the model taxpayer charter, the reasonable length of time for taxpayer to respond is 30 days. So it could be considered also by the DGT about the give more time to have a discussions in responding the draft of the tax notice. An internal review shall be heard by a tax officer who is independent of the audit or inquiry. So in Indonesia, there is a quality assurance department. So if the taxpayer not satisfied with the draft of the tax notice, so they may file a quality assurance to review the draft of the assessment. But the quality assurance is only about the questions of law. The present regulations is mentioning that the quality assurance may file only for the questions of law. I believe it should be it would be good if also not only the question of law but also the question of facts, because most of the audit, based on my experience, especially in transfer pricing, is about the question of facts, because you would like to reconcile about the facts, not only the question of law. So the quality assurance would be as a taxpayer's protections to have a good quality of audit and then to minimize the dispute actually. So next slide. The taxpayers not be required to pay more tax than what has a basis in law. So it should be bear in mind by all of the tax authorities based on the government, that the taxpayers not to be required to pay more tax than what has a basis in law. So this means that when you are in the refund positions, then you have the rights to get the refund. Next slide. Proportionality. This is also relates about the proportionality, how to asking about the documents. So it is important for the overall fairness and support for the system that enforcement action to be proportionate to the circumstances. So if penalties are too severe or punish the taxpayer for action involving no fault, the taxpayer is likely to view the tax system as being unjust. So the importance of the proportionality, that's the amount of the penalty should proportionate with the behavior of the taxpayers. That's the reason behind of the proportionality principle relates to the taxpayer rights. So if you would like to understand about the penalties in the future, so you have to review again that in the first slide about the public consultations, about the draft of the general tax provisions, because in the draft of the general provisions is already mentioning the details of the future of the penalties that the government would like to apply for the non-compliance. So I think it would be great for the tax academicians and practitioners to look over the draft of the general tax provisions. Next slide. So the right not to be taxed twice. The tax system should be designed to avoid double taxation. Currently in Indonesia, for the intercorporate dividends, for the majority shares more than 25% is already eliminated directly. And then in Indonesia, there is a corporate shareholder for the individual now. They still have 10% tax for the dividends for the individual shareholders. So actually there is a plan to eliminate all the dividends for the individuals, from the corporate to 0% from the 10%. But the regulations, I think, waiting for the omnibus law, but I think it will be postponed because of this pandemic. Yeah. Next slide. The right to a fair trial. The Audi Alteram Partem principle give a taxpayer the right to be heard and present his views in respect of the assessment. So in Indonesia, we already have this, that even in the audit also, if you do not invite during the closing conference, then the tax court may cancel the tax assessment. So in Indonesia, the taxpayers may file an objections from the assessments, and then if the objections is rejected, then the taxpayer still may file to the Indonesia tax court. So the right to a fair trial is already existed. Next slide. So this is, I think, the good development in Indonesia. The publication of judgment and privacy. The publication of selected judgment in tax matters is a necessary requirement of best practice, since it allows a transparent overview of the judiciary, make it possible for taxpayers to determine the correct application of the law, and prevents tax authorities from perpetuating incorrect interpretation or practices without proper control by the community. In 2020, the website of the tax court is already published all the judgment. Previously, before 2020, it's only the summary. It's only the summary. Now we are able to see all the judgments without summary. I mean that you can see what is the arguments of the tax authorities, what is the arguments of the taxpayers, what is the evidence of the taxpayers, what is the evidence of the what is the courts, the judge of the courts, how they determine give the judgments, what is the evidence accepted by the courts, and everything. So there is no reductions of the tax court decisions. Now for the students or the academia, you don't have to ask the tax court permission to get the tax court decisions before that. That's they eliminate the name of the taxpayers and something like that. No, because they already published in the website with the whole decisions. So everybody can control now the decisions of the tax court, and then you can see whether the interpretation, how the interpretations, and then the approach of the tax auditors or the tax authorities, and then everything. So I think this is a very good development in 2020 from the tax court. That's the website I also included. I think that's next slide. So this is the reference for the taxpayer rights, that if you would like to have the special interest to understand about the taxpayer rights, that's my reference. Thank you, Christine. I would like to give back to the moderator.
Okay, thank you very much, Pak Dhani. It's very insightful presentation regarding the taxpayers' right, yeah, because I think Indonesia also there is no formal documentation regarding the taxpayers' right, Pak Dhani? And yes. So it is very important for us and also for the government and also for the taxpayers to know and what is the right and obligations of the taxpayers. There are several important things that Pak Dhani has raised in the discussion. For example, it's about the public consultation, about the tax policy development and the making of law, and also about the binding ruling. There should be the clear deadline. It's related to certainty, and the audit process. the government or the DGT maybe should consider to make it longer, the period for the taxpayers to respond, like 30 days period, for example. And also the thing that Indonesia is getting better is regarding the publication of judgment and privacy. Danny shared lastly regarding the publication, judgment, and privacy. So for us, the taxpayers, and also for the academician especially, usually we are looking for the tax data. It's quite difficult, but if we have like this publication, that it can help us here, the academician, to do the tax research. Okay, last but not least, I would like to invite Bapak Yon Arsal from the Ministry of Finance to share with us regarding the Indonesia tax reform. Pak Yon, are you with us already?
Yes.
Oh, okay.
Yeah.
Yes, Pak Yon, the floor is yours. Thank you.
So thank you very much, Bu Christine. Very good morning for all of you. Ada Pak Darussalam. Good morning, Pak Darus, Pak Denny, Professor Adrian, and all of the participants today. So I'm very happy to be invited to this very, how to say, precious seminar, I guess, when everybody talk about the tax and the topic that discussed already, I think very heavy. Pak Dani discuss about the taxpayer right. Professor Adrian previously discussed about the tax reform in Australia and New Zealand. And I might get some very light presentation, probably in the viewpoint of the practical application of the tax reform currently implemented by Minister of Finance, especially in DGT. Why actually? I should talk actually about also from the custom perspective as well, but I guess since we are talking mostly about the taxation today, so I might focus on the reform that has been taken place by Director General of Taxes. So mostly on the area of income tax and VAT and KUP, like Pak Dani mentioned before. I might take like 30 minutes for presentation to give us for some time for discussion later on. Next slide, please. Next slide. I would like to give you some insight on why reform is very necessary. And like we mentioned before, that is a never-ending story for never-ending journey, never-ending story for the Indonesian case. Like Pak Dijen mentioned before, the quotes from JFK: "For the time and the world do not stand still, change is the law of life. And the who look only to the past or the present are certain to miss the future." So I think this is a very good quote, but showing us how important of change is, especially also in our area, in taxation area. Why? Because the environment has been changing quite dramatically, especially in the last, I think, in the last decade. So how the policy should respond to this kind of changes, so that we can come up with a very good policy. We can update our tax administration, and like two presenters before, we have to reduce the compliance costs, administration costs, and at the same time optimizing tax revenue to fill the gap for the development, or improving the fiscal space for the government. So I think this is the story of the tax reform in Indonesia. We can start it at least from 1983. While at the time, the most of the backbone of the reform itself, of the introduction of the self-assessment system in 1983. Previously, our official assessment system applied. We start in 1983 and then still continue until now. Into the period of 1991 to 2000 for the one decade is mostly about the consolidation of regulation. Most of the regulation, VAT, income tax, and general rules are amended at the time to make it more simple and so on. And start from 2001, we completed it with the administration reform. We define our new vision, mission, and try to develop what we call the blueprint for DGT for 10 years DGT at the time. And in 2000 to 2008, this is the implementation of the what we have designed from the period of 2000 and before. So I think during the 6 or 7 years period, the GTT has experienced the modernization of the administration. At the time, you might, we might recall that at the time we introduced a large taxpayers office, medium taxpayer office, and small taxpayer offices. And also, we also have some tax amendment, even though it's not really big one, but I think most of the cases we start to reorganize, to simplify the procedures and administrative things. And during the period, the next step is during the period from 2009 to 2014, while at in this period, DGT start to strengthen the capability to do the internal control, which is very important in order to make modern, as a part of the modern tax administration organization, while the internal control is very necessary. And I think we might also remember that several cases still exist before this period, and which is necessary for us to strengthen our internal control. In 2016, the tax amnesty program launched, which is actually a kind of reconciliation, and continue with the current reform 2017-2024, while we introduce what we call the third tax reform agenda, which is currently ongoing. And I guess Pak Darussalam and Pak Dani also involved such, as a resource person for this reform activity. Next slide, please. Why we need, it is very important for Minister of Finance, especially Directorate General of Tax, to do the reform, and why it is urgently needed. At least there are several reasons. Well, the first one is we believe that there is still a low compliance level. Pak Adrian mentioned before about the tax gap in Australia and New Zealand, which is in the range of 6 or 10%. Unfortunately, we don't have such kind of the formal or many research addressing the tax gap in Indonesia. Many informal. We also conducted our internal research on how big a tax gap in Indonesia is, but it's not really. I think the methodology is quite varied now, so I think we cannot conclude at one point. However, if you take a look at some research in other developing countries, they say that the size of the informal economy, like Professor Adrian mentioned before, for the developing countries is in the range of 20 or 30% of the GDP. So if you take a look at this kind of the rough estimates of the tax gap in many developing countries, we can also estimate that, like for the case of Indonesia, which is also probably in such kind of range. So I think we still have some room to improve to get more optimum tax revenue. The low compliance level leads to the high tax gap, of course. The second one, we need the reform because we need some regulation that need to be adjusted, that very agile to anticipate rapid developments in transaction and in business environment, especially in the last decade where we experience the heavy, or I think the fast development in the digital business transaction, which is also make us the policy side should come up with this kind of the appropriate policy regulation that are very can catch up with this current development. The third one, we experience why it is also necessary for us. We are in the term of the IT database and issue. We see that digital disruption is one key point, and also we see the opportunity that the advance in the digital economy and information technology allow us to do many things that are not really able to be conducted previously. Pak Dani mentioned before about the DGT has now been able to do some data matching, for example, because we receive a lot of data from external parties, for example, the other ministries, and also from other institutions. We also have data from IOI, for example. However, we still have a problem with that, of course. even though of course for this data itself. However, we are achieving some progress on that area, and because of the implementation of technology advancement in this area, we have been able to develop some risk management framework. I might touch on the issue later on. And the previously outdated technology has been also being the background for us to conduct this reform and integrity data issue. Even with current reform, I might mention that we still have the issue with the data, especially from the data from the external parties, because of the lack of the implementation of single identification number is still becoming the big issue for us. Even though we get the data, but we cannot easily match the data because there is no single identification number that can be the key for a matching process. However, we are in the process to do that. And then the fourth one is also there is organization and human resource challenge. I think the structure of our organization is not really I can say that it is less adaptive, while the environment is changing quite rapid. So I think it is very necessary for us. And also we still have a problem of the number of employees. Probably some study from the OECD, if we derive some conclusion on that, in many developed countries, for example, the ratio between the employee to the number of the people of registered number of the taxpayers, active taxpayer, probably around 1 employee for 800, for example, to 1,000. But for the case of Indonesia, it might be the case of one employee for 5,000. I think we need some more the resource to do that. However, we cannot rely on this issue. We have to combine the reform and this human resource with the IT, because currently we also have the opportunity to let's say combine with these two. And some business process also doesn't follow the best practice now. So I think it is still the issue for us. And the last one is ever increasing the collection goals. We can see that mostly in the case of Indonesia, in every year, actually, the target revenue growth target in the last 5 years is around double digit, 20%, 17% or 20%, of course. So I think this is quite challenging for DGT. So this five background has been, I think, the main key why we need the reform in DGT. Next slide, please. Then we also have given the fact that currently we have the suboptimum tax ratio. This is a tax ratio I divided into two, which one is narrow definition, including all the tax, custom, and excise, and compared to the GDP. And then the blue one actually is a tax, custom, excise, and natural resource to GDP. I don't include the local tax, as some reference from other countries also include this kind of the local tax into the comparison. But I think we can see from this simple graph showing that there is a decreasing trend for the tax ratio for Indonesia. And seeing the blue one is also included the natural resource to GDP. So we can also conclude that the variation of GDP tax ratio to GDP, I think tax ratio is also determined by the revenue from natural resources, which is in terms of tax on or non-tax revenue. So I think the dependency of the natural resources is quite high. It is clearly shown by this graph. So the blue one is very variative. Of course, it's following up the natural resource price or commodity price, while the yellow one is relatively more stable, because for the taxation, for example, including custom, not necessarily rely on only on commodity price or natural resource, but however, still some big portion of the revenue coming from this resource. Next slide. And like a Professor Adrian mentioned before, this is a kind of the theoretically the tax compliant compared to the actual revenue. I might not repeat what Professor Adrian mentioned before, but I would like to address what we call a policy gap here. The policy gap is actually based on our experience coming from the one that should be collected but not collected because of the some policy. And start from 2018, we actually Indonesia actually released the report from the tax expenditure, and I think it is quite a good progress and development, showing some also the transparency of tax expenditure. So the publication shows that the tax expenditure in Indonesia is around 200 trillion rupiah, more or less, in 2019, which is more or less is 1.5% of GDP. So I think in terms of the policy, we really give some preference for the taxpayers. That might include also because of the high threshold for non-PKP, pengusaha kena pajak for VAT purpose, for example, and also some facility given coming from the tax rate, low tax rate, for example, for the small and medium enterprises. So this is kind of this one. However, we also admit that compliance gap is quite significant, which is coming from the capability of the tax administration to conduct its job. So this coming from many issues. That's why, because of this background, I think from the previous 4 or 5 slides before, we come up with this current reform implemented in Indonesia. What is the main reform currently implemented in Indonesia? Next slide, please. The current reform is quite, I can say that this reform is quite comprehensive one. I mean, we believe that there is no single bullet that can solve all the problems of the reform in Indonesia. We need to do the comprehensive reform, encompassing all the strategy, all the problem itself. And because of the several problems that I addressed before, that have been addressed before, so now we come up with the 5 main agenda of the reform. We call it 5 pillars of reform that carried out in 2017, or the third reform if we coming back from 1983 reform agenda. These 5 pillars of the reform is organization, human resource, IT and database, business process, and also regulation. And the main objective is to create a strong and credible, accountable Directorate General of Taxes. So again, we believe that without any comprehensive reform, all the problem cannot be solved. For example, in the next slide, please. Many said that one of the core of the tax system, the backbone of the current tax reform, is the implementation of the Cortex system, which is not really a mere system upgrade. No, actually, we believe we admit that there is some outdated of the technology that implemented currently, but the Cortex system improvement is not necessarily to be only the upgrade of the tax system or the core of the IT system of DGT. However, we would like to address some other issues, how to give the better services for the taxpayers, giving the opportunity, the chance to optimize the use of the IT, digitalization process. Digital process not necessarily only related to how we deal with the taxpayers in terms of collecting the money from digital economy, for example. However, digitalization also impact us on how we conduct and how we do the relationship with the taxpayers in this kind of services transformation, making more easier for the taxpayers, reducing the compliance cost of the taxpayers, while at the same time also promote the lower administration cost. At the end, it will lead to the optimum tax collection. And so, based on this understanding, again, we conduct the overall systems or the overall reform. Next slide, please. What is the capability of the Cortex system, the new system, or the new tax reform that will coming up soon? We again, for your information, We planning to complete all the reform process by 2023. So at least by 2024, we start a new DGT, a new way of businesses. However, there are several quick wins during this period. So again, I should mention that we don't really wait for 2024 to be completed, but during this period, we also conducted several reform process and doing some quick wins, so that all the by the end of 2023, many progress will be also expected to achieve before the fully implementation of the reform itself. What is the capability of the tax administration after the reform? This one is taxpayer digital interaction. Of course, we try to optimize using the online channel, multi-channel services. We really want to optimize use of the IT now. We want to transfer many of our services into the website. So currently we introduce what we call the CCC progress, click call counter. We believe that like in Australian or New Zealand cases, we will encourage people to use the click first. Click mean if you want to get some information about the whatever you want, then you can access the information through the website. So that based on that, we try to move all of our services into the website that can be accessed of the taxpayers. If you are not satisfied with the click, if you cannot find what you need in the website, or you have a problem accessing it, then you go on the call. So click call. Call means that you can call our call center to consult with your problems. And the last one, the last resort should be this call counter. So the last resort should be the counter. If you have if your problem is not solved through the website, yeah, and you are not satisfied with the if it also cannot or a problem accessing the call center, our call center, then as the last resort, taxpayers can go to the counter with the office. So this is why it is. I think this is a very important development for DGT, shifting all the manual process services to the digital services. We expect that the compliance cost again for the taxpayer is becoming low, and also we also to lower the administration cost. And by doing these things, we again expect that the optimum tax revenue will be collected. And the second part is really is because of the advancement in the technology and the database, because we receive all the data from many data from external parties. We are now able to conduct the advanced analytic predictive. I think when we discuss with our colleague from the ATO, for example, they are now coming to the next level of using the advanced analytic, not necessarily using the risk management, which is currently based on the historical data. Their system is now being able to do the predictive analytics, to predict what kind of behavior of the taxpayers based on the previous behavior. So I think this is quite interesting development, and we hope also the tax authority in Indonesia can also go to that direction. So the predictive analytic is very important, so that we can mitigate the risk of the compliance in advance, not necessarily after this happens. And the third one is a process automation. The process automation means that we are going to open all the information related to the taxpayer. So currently it's quite not really implemented yet, but in the future we expect that all the process that are experienced by the taxpayer, let's say if you are now being audited and you know in what stage are now my process or my file, then you can check to the taxpayer accounting system, and we will give the account to the taxpayer. Then the taxpayer can check if they are now doing the objection. For example, if taxpayer would like to check what kind of process now, what time we expect it to be due date, for example, then taxpayers can access our information through our website later on. Now, not yet, but we expect in the near future we will have this kind of feature in our system. And also, of course, the collaboration and government partnership is very important. And I think Pak Darussalam, he and also the FABUI is very good at, I think we have a lot of cooperation, like Pak Dani and Pak Darus all mentioned about the cooperative compliance. This is our also the key point that we would like to address in the near future. And for example, now we are already coordinating and cooperating with many tech center in Indonesia, which is Pak Darus is the head of that. So I think we also, again, thank you very much for the cooperation and support from the faculty or the university and the tech center itself. So this is the capabilities of the tax administration we will expect to be launched in the near future. And the milestone so far, next slide, please. We have achieved several things in the area of the policy and regulation. We focus on the area of regulation reform to support other pillars of the reform, especially from the human resource and business process. And we also now in the process of developing the knowledge base. It is quite comprehensive one, so that can be also accessed by the taxpayer later on. And we also in the process of harmonizing our regulation, the overlap one or the obsolete one, so which is in the process now. I think we expect this to be completed soon, so that there is some also certainty to the taxpayers for their doing the business. And the third point is the system itself has been also playing a very key role in terms of giving the tax incentive during this COVID-19 periods. I think several tax incentives has been launched by the government in order to maintain the demand and supply side of the business or the consumer. And the last one actually is reviewing of the current tax regime. It is important also for us to design what kind of the regime that might be implemented later on. From the organization resource, I think some milestones have been achieved so far. I think we have achieved some organizational restructuring under the current Director General. I think, however, because of the COVID-19, I think some of that are being postponed to the next year. But at least we have some program on some progress on reorganizing our organization, as of course, and also when dealing with the human resource. And we also have the improved system of human resource management system. In terms of the business process, simplification of everything has been started. For example, in terms of the e-filing, last year we experienced only 80% of the taxpayer use the digital services, the filing services, but this year probably 95% of them using the digital services, e-filing. So I think it is a quite good progress or development from the business process. And also the OEDB, from the OEDB perspective, I think even though we are not, of course, reaching the level of the New Zealand or Australia, but I think there is quite good improvement in the last 2 or 3 years. Previously, we are from the taxpayer perspective, taxpayer side, the OEDB for Indonesia is in the rank of 120, but now we are in the 80 ranks, of course. And we are going to do more reform in order to improve our services to taxpayers, so that becoming easier for the taxpayer to access our information. And the last one for the IT and database, we are now implementing also the current risk management framework, which is a very critical one, I guess, to make aware is a starting point to create a fair and transparent enforcement activities for the taxpayers and supervision of taxpayer, which is why we're focusing only on very risky taxpayers. And also the last one, probably we start piloting with state-owned enterprises to go further in terms of not only sharing e-factors, for example, house to house, but also to create access the chart of account, and then in the future probably we are able to come to the conclusion together, like what we call the similar to the APA, for example, so that later on we will reduce the cost burden for the taxpayer to be audited. So if following the program, probably they don't need to be audited unless there is some critical issues later on. So I think most of these milestones has been quite significant progress for DGT as the introduction before the implementation of the new reform in 2023. Next, so again, next slide. Of course, the main objective is robust capability of 5 pillars, and at the end, the ultimate goal, of course, to improve the tax collection and expanding tax ratio to the optimum level possible. So I think I need 5 more minutes to, if it is possible, Bu Christine, to give 5-minute update on the medium policy. Is it possible?
Yes, still.
Still, yeah, probably five more minutes left for assessment. Still have some 2 or 3 more slides to give some update on that. Next slide, please. After discussing about the current policy reform in Indonesia, I would like also to give you some insight on how the voice fiscal policy challenges in 2021. You know very well that the COVID-19 has been forcing us to the level of very, how to say, very difficult one for DGT. Yesterday, Bu Menteri has been the about the revenue, and I will see that the growth rate of revenue is being minus 14% around until the period of the end of July. It is quite challenging, of course, for DGT. While at the same time we have to collect also tax revenue to secure the financing for the COVID-19 spending. And there's some tax revenue risk in the left side that you can see. From the target of initial target of our APBN from 1,640 billion rupiah. Well, probably we might not be able to collect this much of the revenue because of the pandemic, making the economics not growing as expected, and cash flow problem for the business as well. So in Perpres 72, the target for revenue target for DGT has been reduced by 27%, from 1,642 trillion rupiah to 1,198 trillion rupiah. It is still challenging to complete this target, of course. And the commodity price, like I mentioned before, is still the issues. And the pandemic has been here, so that we are not really certain yet when it will last. I think we hope that it can be solved soon, so that the economic at least can come up, or even though it's not really. Of course, in the Q2 experience, we experienced a very negative growth rate. And we might see later on, it's already August, and still the economic is not really growing to the current levels. So I think still challenging for us. So challenging and economic mean challenging for the tax revenue collection. And we also have the problem of the effort. Of course, the enforcement activities, supervision activities cannot conducted normally during this limitation period, while for example the staff working in the office only 50%. Not all of these job can be done through the house, so not all of the process can be completed through the work from home activities. So some should be done now in the office. So and also like intensification program, actually the main characteristic is to see and look in directly the activity or the business of the taxpayer, which is not I think currently cannot be done. So I think we have a challenge on this one. And also tax revenue challenges, because not only the tax revenue risk, because also have the challenge and revenue, while the transformation to the digital transaction, and also some other thing that the need to expand the tax base has been very challenging in the near future. So in the short term period, the tax policy 2021, based on the documentation of the government, we are addressing several issues for the next year. The first one, we must continue giving some incentive, but the incentive should be the effective one. So we need to review all the incentive that has been given this year. So also the role of DGT, the role of Minister of Finance in terms of collecting revenue is not necessarily limited to the collecting revenue for this years, but also to support the effort to the part of the recovery program, the economic recovery program. And also we focus on legislation and regulation, of course, and at the same time we still have to expand the tax base through these something in a very, I think, for reducing or eliminating tax gap, improving the compliance level of the taxpayer. So this is very important policy that need to be addressed in 2029. Of course, this will be following up by the strategic or technical agenda, but I think today I only touch on the big focus on 2021. Next slide. Next slide, please. Yeah.
Next slide, please.
Yeah. Before this one, the previous one. Okay. The medium-term outlook and revenue is still also the problem of the growth rate is still, of course, still being discussed. But again, if we summarize this one, is we define only two categories: the policy to support economic growth and policy to optimize tax revenue. And I would like to conclude my presentation with next slide. There are several medium-term revenue strategy recommendation, administration policy, policy reform recommendation, administration reform recommendation that have been proposed by several organizations, including, let's say, for example, IMF, World Bank. So I mentioned some of them here. This is not, this is in the process of that need to be further discussed in the future with the DGT. So I think this is the proposal from many institutions. I guess also internally we also discuss many things with that, including with Pak Dani and Pak Darus. We have discussed several programs here, but some of them are not really come up to the conclusion part yet. So most of the cases, the international organization and some other external institution propose agenda, for example, in income tax reform strategy, including expanding tax base in terms of the object and subject. And the second one is regulating incentive, which is also currently we are implementing this part. And tariff, some organizations say that we are not really progressive enough for the individual taxpayer, for example, but we have done enough for the corporate section, for example. So I think we have to discuss this proposal further on. And some proposal coming in to also recommend Minister of Finance or DG2 to reevaluate the implementation of the final tax regime. Some of them, they say that it's not really already outdated because it's back to the more than 20 years regulation, for example. And now we already have the capability to conduct the better administration issue, for example. So I think also it is very important. So I think 4 of them are still on discussion. We need, like Pak Dani mentioned before, we need to open our organization to discuss with all the stakeholders within the taxpayers, parliament, or the other part of the government also. still under discussion. And in the area of the VAT, expanding base is mostly the template that are recommended by the many institutions, and also the incentives, tariffs, and some are recommending reviewing the sales tax on luxury goods. And so I think this is the main proposal actually that come up from many institutions that need to be discussed, harmonized with our with the Minister of Finance and DGT reform agenda. So I think it still needs some more time to discuss with all the stakeholders. So I think this one as a conclusion remark for this presentation, I guess that this is that I can say. Probably if some question on that, I'll be happy to respond to the question later on during the next session. Thank you very much, Bu Christine. I'll give it back to you.
Okay, thank you very much, Pak Yon, for a very interesting presentation. And because I'm so excited to hear your presentation, my apology not introduce you at first. So now I would like to introduce Pak Yon. Pak Yon, I will show the CV. Where is it, the CV? Oh, there is no CV here. Okay, Pak Yon Arsal currently is the Assistant Minister of Finance in Tax Compliance, and he got the Bachelor of Economics, major in accounting from University of Pajajaran, and Master of Science degree in Fiscal Administration from University of Indonesia. So thank you again, Pak Yon Arsal, for the interesting presentation, and also interesting title of the presentation, Never Ending Story. It's Pak Yon already covered the tax reform in Indonesia, which mentioned the time limit and also the reason why the reform of the tax system, and also regarding the interesting thing is about the Cortex system, which is ongoing. Hopefully it will finish by the 2024, Pak Yon. And also the last one, Pak Yon mentioned about the medium-term revenue strategy related to the income tax reform strategy and also VAT reform strategy. Okay, so now we move on to the question and answer session. There are a lot of questions from the chat room in Zoom, also in YouTube, because here we also recorded live in YouTube sharing session. I will choose several questions first. Okay, the first one is, let me check. Okay, the first one is from Pak Christian Agung Prasetyoto. To the three speakers, do you have an estimated compliance cost among taxpayers in Indonesia or Australian and New Zealand? Maybe Indonesia is for Pak Yon and Pak Dani, and Australia and New Zealand is for Adrian. Who wants to answer first? Adrian, do you have the answer for this question, or Pak Yon?
It would be good if I did have the answer. I guess all you can do is look at estimates that have been done in prior years, which some of them are done by surveys, some of them have been done by more extensive interviews. So for SMEs, I can't tell you what the exact figures are because they're several years out of date, but they have shown a bit of a declining percentage in terms of the cost, but they're still adversely hitting the smaller businesses in a greater amount. So the only way that they can reduce them is by more online simplification, and in some cases getting rid of exemptions, reducing calculations, things like that. But for large enterprises, there's no published information that I'm aware of, excuse me, of compliance costs. I have done some work with our Inland Revenue, but I can't unfortunately talk about it because it was confidential. But that was again more based on in-depth interviews, trying to get an understanding of what the costs are. So can't provide a lot of help there, but the sort of things I talked about gives you an idea that they're still significant, still substantial, and unfortunately from a taxpayer's perspective, there's a preference to load the costs onto taxpayers rather than the administration incurring more costs. But that's because their masters, government, is basically trying to force them to reduce what they need. And the only way to do that is to pass costs on to taxpayers.
Okay, thank you, Adrian. And Payon, maybe you want to answer this question?
We don't have any exact estimate on the compliance cost in Indonesia. I'm sorry for that. So there is some research on by some friends. Probably I might come up on the, but I don't know exactly what the result is. I'm sorry, Bu Christine, I don't have any figures, the exact figures to answer to respond to this question. Sorry.
Okay. Yeah, Panani, do you want to add?
Okay, actually, same with Payon. I don't know about the cost of compliance in Indonesia, but based on OECD survey, the administrative cost in Indonesia it's quite low. That means that the tax collection is from the withholding tax and then from the tax collected by the taxpayers, for example, the VAT and then the installment Article 25. Yeah. So it's based on the survey of OECD. But compliance cost, I don't know.
Okay. Yeah. Thank you so much, Pak Dani, Pak Yon, and Adrian. Hopefully, Mas Agung, are you satisfied with the answer? Maybe you can do the research, Pak Mas Agung, regarding the compliance cost in Indonesia. Okay, and then the second question is from Denny Fisaro to Pak Yon. How has the CRM been benefiting taxpayers so far, since its performance is dependent on the existence of Cortex System, which is not ready yet? Thank you.
Yep.
Yes, Pak Yon.
Thank you very much for a very difficult question. So I think CRM is a way of how we conduct the business, so that the benefit for the taxpayer, actually, I can give the example of course, mostly on the currently the machine itself, it is a framework actually how we deal with the taxpayer. So we would like that in the future that by separating the taxpayers based on their risk factors, so we can address the appropriate treatment for the taxpayers. So we might in the future we might not coming to audit if the taxpayer is a low risk taxpayer. So whatever the I think because tax audit will give you the compliance cost, whatever it is, a small or a small audit, whatever, still the compliance cost for the taxpayers, and might not be the good experience of taxpayers. So compliance, risk compliance management is a way for us to differentiate between taxpayers based on their risky factors. So we will give a better treatment for the taxpayers who are very compliant, and we will address our enforcement strategy only for the taxpayers who are risky. So how we develop this compliance risk management now? We don't wait until 2024 for this part, because we already receive many data now. Currently, our internal data has been the quality of the internal data has been improved very well, significantly. One part of that is becoming now the taxpayers has been using digital or e-filing as the key part, so that we receive the data. We don't have to re-record the data again, because there is always the human error problem when we receive the manual data and then we should input it manually in the system. Now we receive most of the data electronically, so it can be injected directly through the system. We don't do anything, no intervention on the data. So the quality of the internal data has been quite improved very much in the last 2 or 3 years. And also in the external data, even though we don't receive all the data we expect from the external parties yet, however, we are improving some part of that. So again, I think combining the internal data, external data, we start to develop our own compliance risk management framework, learning from the experience of the OECD countries, and also especially from the Australian, most of the cases of the while the Australian implement what we call the risk differentiation framework. So I think we hope this compliance risk management, which is launched last year, will be we can develop better and better every year, so that by the near future we come up with this very comprehensive and compliance risk management. Again, the purpose is also to give the better treatment for the taxpayers based on their risk factors. So I think at the end, the main objective, I say, the optimum, reducing also the compliance cost for the taxpayers. And again, from our side, the compliance risk management will also help us to better allocate resource, the limited resource we have, the auditors, the AR, for example, so that again, compliance costs reduce, administration costs reduce at the same time. This is the quick comment from me, Bu Christine. Thank you very much.
Okay, thank you, Pak Yon, for the answer. And the next question is to Pak Dhani. Pak Dhani. Besides specific deadline, what should be the ideal rule for tax ruling to improve taxpayer certainty and trust to the government?
What the tax ruling?
Okay, I will repeat the question. Besides specific deadline, what should be the ideal rule for tax ruling to improve taxpayer certainty and trust to the government?
Okay, in my view, that's actually that I already informed the deadlines of the discussions, because mostly based on my experience that normally the dispute is not question of flow, because if you need to certain, it's about the question of flow, but mostly it's about dispute in the question of fact. So that's why I proposed more the flexible time in response during the audit process. So we have a lot of more time, the taxpayer and the tax auditor, to discuss about the fact disputed rather than dispute in the court. And then in the court, not question of flow, but the question of fact or just reconciliations. So because mostly, especially in transfer pricing, most of the dispute is not question of flow. It's about the question of facts. So I think because it is also mentioning in the taxpayers' rights about in the audit for example in the UK. That there is three discussions before go to the dispute. So both parties must understand whether there is a dispute in the fact. Both parties whether understand the disputed is question of flow, or both parties must understand whether there is a hybrid dispute. There is a dispute in question of fact or dispute in question of flow. So I think during the audit process, there should be identifications of the disputed, and then that I mentioning also about the quality assurance. Not only the question of flow, but the question of fact also are able to ask review in the quality assurance. Now the quality assurance is only question of flow, not allowed for the question of fact. So based on my view, that's the answers.
Okay, thank you, Pak Dhani, for the answer. Next, the question is for Adrian. What is, from Brismi Otlani, to Adrian, what is the best change management strategy for mitigating the resistance of internal and external stakeholders in conducting tax reform? I repeat, what is the best change management strategy for mitigating the resistance of internal and external stakeholders in conducting tax reform? Adrian?
If I knew the answer to that, I'd probably have a different job, and I'd be been a consultant, but some thoughts on it is, I think, critical to reducing resistance is being open and consultative to explain why you're trying to do something and why this proposal is going to improve things for the tax system, for taxpayers and the revenue authority, and inviting, I guess, in some way, some feedback on it, rather than just suddenly saying, this is what we're going to do, this is how it's going to affect you, and not involve the people or bring them along with you. So I think it's been open and consultative, but it also requires there to be, prior to this, trust in the government, in the revenue authority, excuse me, in terms of what they're doing. So if you don't have that right environment, I don't think it'll matter what you do, you're still going to have people being resistant if they don't trust or if they believe that there's a hidden agenda or something else. And you might be saying this, but really you're trying to do something else. But I don't think there'll be one sort of perfect way to manage reform, because it'll depend on circumstances, the country, the time frame, etc. But that's some thoughts anyway.
Okay, thank you, Adrian. And then the next question is, okay, let me check. To Pak Yon. Do the pandemic affect the tax reform? If the answer yes, to which pillars is the most affected, and how the Ministry of Finance or DGT facing that? Yes, Pak Yon.
Thank you very much for the question. I think I can say that in terms of the tax reform, the pandemic doesn't affect much on our agenda, because eventually we can do it from some reform program because mostly on the concept and refining the system itself. So I think we can still doing it. There is nothing that are affected too much in this reform program, Christine. However, of course, we admit that some activity to collect the tax revenue this year might be affected, heavily affected. Like I mentioned before, the activity to collect revenue from activity based on extensification program, which is our staff should go out, reaching out to taxpayers, look at their businesses. Of course, it will be affected too much. And also, audit activity also affected by this one. Let's say, for example, Pak Dhani mentioned most on the case of the audit. For example, once we come up with the taxpayer, when the taxpayer would like to discuss the result of the audit, for example, however, the limitation of some area doesn't allow us to discuss directly. Sometimes direct less in this kind of small Zoom box is not really effective in dealing with tax dispute, ya Pak Dhani ya. When we talk about a lot of money and then we only discuss in a very small box, we cannot really see the expression of the taxpayers or the tax officers. So sometimes it's not really effective. Some taxpayers require the direct contact with the tax officers. However, some office might not be able to be visited during this pandemic. So it's kind of this collecting the money now being affected. But again, coming back to the question, in terms of the revenue, in terms of reform, it might not, I may say that it might not affect too much. Some of them may be, like I mentioned before, some small, for example, we planning to relaunch our new reorganization this year. For example, by introducing new medium taxpayer offices. This might be affected because it's not really possible to launch new offices during this pandemic era. So it might postpone a little bit, but again, overall conclusion might not affect too much on the reform program. Thank you, Bu Christine.
Okay, thank you, Pak Yon, for the answer. And I will give the opportunity for Ms. Aisha Jasmine, for asking directly to Pak Dhani and Adrian. Please, Ms. Aisha, to unmute yourself.
Thank you, Bu. Thank you for the opportunity. Can you hear me clearly? Or
yes.
Thank you. My name is Aisha. I'm currently an intern at DDTC, actually. I want to ask to Pak Dhani and Prof. Sawyer about taxpayers' right. Recently, I heard a case where a director of a company is being convicted based on Article 44B of UU KUP, which is about the causing the loss of the state revenue, and then the person is served his time in jail, and after release, the company is given SKPKB again for the same case which make the director is go to the jail. The question is, in the law, we know the principle of nebis in idem, which means that the same case couldn't be convicted twice after it is served. So and also in the taxpayer conference,
Right.
one of the taxpayer right is to have the to be treated with fairness and impartially. Impartially. So I think what I want to ask about what Padani and Prof. Adrian think about the case, because it is not in line with the principle of law and also the right of taxpayer. Thank you.
So, okay, Adrian first. You can answer first.
Okay, well, thank you. That's a very interesting scenario. Thinking about it from an Australia and New Zealand perspective, it would be correct that if there's going to be an action taken over some tax non-compliance and it's criminal, there would be the one opportunity to do it, but you would look to bring all the potential parties. So it could be the company, the directors, managers, whatever, and it would be dealt with on one occasion. And then when that's dealt with, the criminal side, there may also be civil penalties to be dealt with after that, but the underlying actions can only be dealt with once. So that would be the principle we would have. So if there was an error by not including someone or something, basically the revenue authority wouldn't get the second opportunity to come back to it. So that's why they have to think very carefully and plan when they do it the first time. So it does concern me that once something is dealt with, there is the risk that it might get revisited. But I'm saying in our case, the criminal side can only be dealt with once, but then after that, there is the ability, if there is what we call civil or penalties, they would be dealt with following the action taken over anything that is criminal in nature. So that would be key. Also, part of what is expected, and it's in our legislation, is each taxpayer is to be dealt with fairly and impartially. So that is recognised, and in effect, that is a right each taxpayer has. But sometimes, to be sure of that, they're best off to have a representative, whether it's a lawyer and accountant, who can make sure that all of that's dealt with properly. But yes, at least according to the legislation, the system does say every person should be dealt with fairly and impartially. Thank you.
Okay, I would like to answer about Aisyah, Jasmine, So that's, you already give the answer about the principle nebis in idem, that is the prohibition of double jeopardy. So actually this is the role of the court to safeguard the taxpayers' protections, that they must consider about the legal principles rather than the rules itself. So the legal principles is beyond the rules or beyond the rulings, because sometimes legislator can go wrong. That is not included the legal principles when they are making the tax law. So, and then also in addition to that, I believe that it should be a internal coordination in DGT, that not to make the double jeopardy to the taxpayers. So there is a book that is good regarding explaining about this. That is the safeguard from the tax court to implement the legal principles rather than the rulings, is the equality principle, but by the Gerard Tekamusen. That's the books, actually. Okay, thank you, Aisyah.
Okay, yeah, Aisyah. So, are you satisfied with the answer, or do you have further question?
Yes, sure, I'm satisfied. But if I could add the fact that DJP give them SKPKB, what could the taxpayer do, or we as an auditor do, give advice for the client if it happened to our client? I mean, they already give us SKP KB again, so they're not comply with the legal.
Yeah, to the court. Yeah,
Yes.
to the court. Yeah, you have to file to the court. Yeah,
Okay.
that's a safeguard. That's the latest safeguard for the taxpayers. Yeah.
Thank you, Pak Dhani.
Yeah.
Thank you so much.
Okay. The next question is it's from Chai Fungit to Adrian. As compliance cost, especially for GST and VAT, is quite high, Indonesian threshold for VAT supplier is currently 4.8 billion rupiah, approximately 330,000 US dollar. But it is believed that the non-compliance or not registered VAT suppliers in which believed to pass the threshold are large. Some have suggested that the threshold to be increased further. What is your opinion on that?
Okay, very, very interesting question. I'll just give you quickly a bit of background in New Zealand. So the registration threshold in New Zealand is 60,000 New Zealand dollars, which is about 35,000 US dollars. So it's quite low. So that means it captures a lot of businesses, and that it used to be even lower than that. So they've actually increased the threshold slightly with time. So I would caution against raising the threshold for two reasons. One, it will then encourage people to try and drop below the threshold and come out of the system. And it'll also mean your revenues will go down further as well, because there'll be less taxpayers who are having to charge VAT. And it could be, the only reason you might increase it is that if you've got a lot of inflation and your dollar values have gone up, so you are sort of indexing it rather than changing it because you're not being successful. So I think it's more about finding strategies of detecting non-compliance is more important than trying to increase the threshold. And the aim should be, with time, if you get better information, better systems, is actually to bring that threshold down so more businesses come into the system. Mainly because you get a lot of advantages then from income tax, because VAT registration actually helps pick up income for income tax purposes. So you can actually improve compliance and other taxes as well. Thank you.
Okay, thank you, Adrian. Maybe I would like to invite Pak Yon also to comment on this regarding the VAT threshold. Pak Yon?
Sorry, still unmute. Sorry, Bu Christine. So I think VAT threshold, like I mentioned before, has been the key point of our tax expenditure part. I mentioned in my presentation that tax expenditure is coming. The amount of the tax expenditure into 2019 is about 1.5% of GDP, which is a quarter of them coming from because of the threshold of PKP actually. So I think, but this is the policy option that are still going on discussion, Bu Christine. So like I believe that in my last slide that many institutions like World Bank, IMF recommend DGT or Minister of Finance to again review the threshold of PKP. Some say that is too high compared to the other countries practice
threshold.
Like, the threshold for the VAT, also at the same time for the income tax, let's say for the small and medium enterprises. Some say that in the case of Indonesia, case of the 4.8 billion rupiah is around 1.3% of GNI per capita, for example, while in other countries, in other developing countries, mostly like 30 to 40% only, 0.3 or 0.4 of GNI per capita. So we are significantly high from compared to the other countries' practice. So again, this is a critical issue for us, not necessarily only from the academic perspective, but also from, there are so many other issues that behind of this policy. So I think we are now in the process of reviewing together with the institution, looking at carefully what the impact will be on the tax revenue, would be on the impact on the stakeholders as a whole. So I think, Bu Christine, what I can say about this threshold is we are in the process of, together with other reform agenda as well. The threshold is one of them, but we are in the process of reviewing some of other VAT regime that are currently has been moving around also in the world, I guess. So still big challenges, and I expect that, and I also hope that all the participants here from the academic world or from the students probably can give us some input later on for to get some better result that can be, how to say, of course we believe that there is no such kind of in one policy there is no all the winners. Of course some winners, some loser, of course, in any policy option. I think what we need is to create a policy that can give more winner rather than a loser on the policy adoption. Then we need the stakeholders intervention on that. Thank you. Probably I give it back to you, Bu Christine.
Okay, thank you so much, Pak Yon, for answering the question. And hopefully, Pak Chai Fungit is satisfied with the answer from Adrian and also from Pak Yon. And now there's a question from Risanto. Risanto is student of UI accounting program. A very good morning to Pak Yon and all distinguished guests. Regarding the tax regulation of e-commerce that was postponed last year, will it be implemented soon due to the increase in digital transaction in this pandemic situation? That's the first question. And then the second one is, how is the role of account representative in the next tax administration design? Maybe Pak Yon will answer.
Thank you very much. It's a very interesting question. So I think we start with PMK 48 this year. We start to implement this VAT, MSE for VAT first, while the consensus for the income tax, we are still waiting for the global consensus. We expect they're still on the way to complete it, even though there is some issue on the pandemic also. So I think, again, what the direction that I can mention here, for the VAT, we already launched the regulation on that, allowing the player from the foreign players to be the VAT withholders, so that enable the level playing field with the local players. So this is the first development, and I think recently we have appointed like in the first stage is 6 players, 6 platform, including Netflix, Google, and I guess in the next round we will appoint it another 9 and still continue, because Bu Christine is not necessarily easy, because we have to, I think we need to talk again. What Pak Dani mentioned, how important is the discussion with the stakeholders. We try to adopt also this approach, doing the discussion, conversation with the platform one-on-one basis, because anyhow they need also to change their IT somehow. So we don't want to give them some burden on the unnecessary burden, changing their IT structure very much to adjust with our rules. So the VAT is on the way, and we expect that there will be progress from time to time. And for the income tax, again, what I can mention here, that we are still waiting for the global consensus by the end of this year. And even though the regulation has been allowing us to also to introduce like some other tax the replacement, but again, we are now also discussion with many stakeholders before implementing this regulation. And for the second question, what is the role of the AR? Thank you very much. I guess we are in discussion also internally what kind of role that can be the appropriate role played by the AR. We are maintaining the role of AR, even though if we take a look at the statistic from other countries, I think not necessary. I think Indonesia is one of the few countries that adopted this kind of the AR business. I mean, the AR function, while exactly in the very frankly speaking, AR might be a kind of the consultant for the taxpayers whenever they need some consultation on that. Even though they also play the role of the supervision, this kind of a mix still applied. So that's Last time we separate AR into two functions, AR for the supervision function and account representative for the service function. We don't want them to mix their role. So this is the first development we achieved. And probably for the supervision function, we might combine their function into auditors, even because we believe that their role actually some of their role is actually audit actually. So I think probably in the near future we are thinking to mix or to combine their role to be what the auditors currently doing the audit, even though it might be like a simple audit or something like that. So we are still in discussion on that. However, again, I can mention that the role of the services or AR we still maintain on that, but some AR probably might move to the audit function. Bu Christine, this is
I see.
the question, the answer from me. Thank you.
Thank you, Pak Yon. Maybe I would like to invite Adrian to comment on this question. From the New Zealand point of view, how about the tax regulation of e-commerce in New Zealand? Is there any separate tax for e-commerce, for digital? And also, is there any, like we have in Indonesia, we have the account representative, which Pak Yon already mentioned before. Is it also applied in New Zealand?
Okay, what I can say is over time we've made sure that with our GST system that we are capturing the virtual transactions, so business to business, business to consumer. So that's been captured. But in terms of taxing the transaction separately, there is a digital services tax discussion paper that the government released nearly 2 years ago now. They got submissions, but it's sitting on hold because the government's preference is for an OECD consensus, and then they will follow that consensus. However, if there isn't an OECD consensus or they're not happy with it, then they might look to implement it, and it would be around about 2 to 3% rate. So similar to some other countries overseas, but there is a little bit of concern about what would be the backlash from big countries like the US in terms of what might happen to New Zealand. But at the moment, we're working with the OECD, hope that we'll get a outcome that will suit our needs. But if it doesn't, then there's the possibility of a digital services tax.
Okay, so it's not the income tax, right? It's the other tax. The other kind of tax.
It's a separate tax that would be based on some measure of transactions that occur with New Zealand, and it would be based on potentially some of the largest providers of digital services that come into New Zealand.
Okay, and how about the second question about is there any kind of role of account representative for the taxpayer in New Zealand?
So most business taxpayers will have somebody in the Revenue Authority who they can contact directly, but most taxpayers go through their tax agent. So it would be their tax agent that would have a direct link with somebody who looks after their account. And the revenue has changed over time the way they do it. They used to have it based on tax type. It's now largely based on taxpayer, which I think makes more sense. So you would have somebody who you can contact. This is more for the medium and larger businesses who would be able to give you that direct contact and deal with issues that come up. If so, it's easier if you've got a tax agent because they can do it for you. If you do it yourself, it can be an issue if you are a smaller business because you won't necessarily have just one person. It might go around different people until you actually get that support. But it is something they want to do to try and streamline the interaction between Revenue Authority and taxpayer.
Okay. One question for you, Adrian. I just wondering, maybe I skipped that one, but I need to confirmation. You mentioned about the MyIR. Is it in New Zealand or is it in UK? Regarding the MyIR?
That's a New Zealand one. Yeah. So the UK has a similar thing as well. So it's basically on the Revenue's website, each taxpayer's got a personalised account that they set up that has all their tax information. You can file your returns through it. You can send messages through it, etc. So I do just about all of my interaction now that way. It's more efficient than trying to get on the telephone and get somebody at the other end. And it's also faster. So you can get a tax refund much quicker than sending in a hard copy. And also, given that the revenue's got very few offices, now you don't tend to go in and deal with people directly at all unless you're in an audit investigation, and then there might have to be the fact that you'll come into a revenue office then.
Yes, and regarding this one, maybe Pak Yon, maybe this is the same, right, with the taxpayers account that we are planning to have in near future. Maybe Pak Yon can share about this.
Yeah. Thank you, Bu Christine and Professor Adrian. I think taxpayer accounting is one of the way of open up the transparency for the taxpayers. So I think we are developing the system, Bu Christine. There are some several modules in taxpayer accounting that we are developing now. The first one is we are focusing on taxpayer accounting that are cleaning up the problem internally, especially, for example, the collection that has been the finding of the supreme auditors every year. So this year we introduced what we call the revenue taxpayer accounting for the module of revenue accounting system, which is mostly addressed for the tax piutang pajak ya, piutang pajak, tax areas. And the second step,
tax areas.
The second step is we are now in the process of developing the taxpayer accounting that can be also accessed by the taxpayers, probably in the near future without having to wait until 2024, I guess. So I guess we will have some services where the taxpayers can also access some information from the taxpayer, especially during monitoring their rights, like Dani mentioned before. For example, whenever you are audited or you are doing some progress objection, for example, previously, if you would like to know where the process is, you have to call the offices. Now you can access the website and you can check what is the process going on. And also you can have your own account in this taxpayer accounting. You can also access your own information. Of course, you cannot see other taxpayer information. You can also have access to your own information. How many tax that you have paid so far. And sometimes it's very necessary, Bu Christine, because we still have some issues that some malpractice from some people that abuse the taxpayers. Some middlemen, for example, they said they already report the taxpayers to they are already report the or submit the tax return to the tax officers, for example, or the tax office. But later on, when the AR come to them, they say you don't have any, we don't have any record that you submit or paying some tax to us, for example. So some kind of the malpractice from some people that are not responsible, that are abuse the taxpayers, so can be also monitored during this using this taxpayer accounting system, because I can really make sure that how much money that I already transferred to the government, the taxpayer, I can monitor directly. So if there is some people that are abusing me under the name or sometimes or irresponsible consultant, for example, or the illegal consultant, for example, then can be thing can be eliminated during using this kind of method. So I think not necessarily only to know the process that are engaging on in some business process, but also to help me to understand what kind, how many tax that have been paid to the government, and showing the result, a history of the payment itself. So this some additional information, Bu Christine.
Yeah, okay. Looking forward for that, Pak Yon. Hopefully within 2 years or
I guess in the next 1 or 2 years, Bu Christine, we are developing the system now. We are just completing the module for tax areas and some module for the tax potential. So the next module is I think the tax area and tax module for the tax potential will be completed this year, so we can focus on developing or developing the module for the taxpayer next year. We hope that it can be implemented soon, Bu Christine. Thank you very much.
Okay. Interesting. Yeah, this is the new information for us, to all of you who listen to this webinar, that soon we will have the taxpayers account, just like in New Zealand, MyIR. So we'll see, and we will wait for that, okay? So it's already 11:52. I think we are approaching to the end of this webinar. But before I end this webinar, I would like to invite all the speakers to give short concluding remarks regarding our topic of webinar this morning. Firstly, I would like to invite Adrian. Adrian, can you please give a short concluding remark regarding our webinar?
Thank you. Happy to do that. I guess a couple of comments. I hope that the perspective that I've given from Australia and New Zealand gives you an idea of where there's actually a lot of similarity of things that have gone on with our two countries, but also with what's happening in Indonesia. And in fact, I've taken away and learned quite a bit. It's very interesting to see where things are going in Indonesia and how we are. I didn't talk much about that, but how we've done some similar things, for example, responding to the COVID pandemic. That's taken over everything. So there's virtually nothing else happening in tax at the moment. So that's good news from one perspective, but it's not good news because what's having to be done is costing a lot of revenue and is going to have big issues coming forward in terms of how we pay back the debt, etc. But I think the greatest thing is by talking and sharing, we can learn a lot from each other. And I appreciate the opportunity, not only to have spoken, but being able to listen and hear what's happening in Indonesia. So thank you very much.
Yes, thank you very much, Adrian. I really appreciate your willingness to share with us here in this webinar. And next one, I would like to invite Pak Yon to give a short concluding remarks regarding our discussion, Pak.
So thank you very much. I guess I learned a lot also from Pak Adrian and Pak Dani for many things at least, and also from the question from very active participants. I guess I'll coming back to my organization to see that how can we also input, give us some input. Discussion today give us some input also for the current reform program that are currently implementing in DGT. As a conclusion remark, I must say that Bu Christine, it is again as the title say that it is a never-ending journey. We might never conclude our reform program. Then might coming the fourth reform, the fifth reform, probably 100 reforms. So I think currently because of the development of business environment, everything, probably we are continuing our reform progress, and we might not achieve the optimum result without any support from the stakeholders, every stakeholders from this reform process. So again, I personally and on behalf of the organization will say that we really need the support also from the comment and input from any stakeholders, from the academics, from environment, from the students, from also the consultants, and also from the whole parties that are might really interested in this issue. So I think again, please give us some support on that, and please feel free also to contact me if necessary, if you really want to give some input for us, so that probably we can discuss internally and then consider it as a part of our reform agenda. That's Bu Christine. Thank you again for inviting me, for UI and Pak Darussalam, Pak Dani to invite me in this conversation. Thank you.
Thank you very much, Pak Yon, for your conclusion remarks. And then last but not least, Pak Dani, please.
Okay, thank you, Bu Christine. So I just would like to address again about Pak Yon mentioning that the DGT would like to digitalize all the data, so it should be easier to monitoring or real-time audit. So I hope that after all the data is already digitalized, so the dispute could be minimized because all the data is already on the table. because the taxpayer data is already in the DGT data that is already online. So the monitoring and then the real-time audit should be minimized the dispute. So I hope so. Thank you.
Okay, thank you, Pak Dhani. So, ladies and gentlemen, Bapak Ibu, finally, I would like to thank all our amazing speakers and also all the participants who already attend in the Zoom and also in the YouTube channel. And hopefully, you and all of us can get knowledge from this insightful and very fruitful discussion this morning. And I special thank you also for Pak Darussalam and Pak Dhani from DTTC Fiscal Research that support this webinar. Hopefully our collaboration will not stop here, and we will continue our collaboration in the future. And also from the Pak Yon, from the Minister of Finance, maybe in the future we can collaborate with the academician as well. And also for Adrian, thank you so much. Thank you so much for sharing your knowledge and sharing your interesting presentation here. And hopefully from Indonesia and Australasia, Indonesia and Australia and New Zealand can make a good collaboration in terms of tax administration reform, for example. So once again, thank you very much to all the participants, and I would like to pass on again to the MC. Thank you.
Thank you very much to our wonderful speakers for the insightful and fruitful presentation, our amazing moderator, Bu Christine, for a very interesting discussion, and last but not least, the incredible attention from all participants. Please give a warm round of virtual applause for all of us. Thank you. I would also like to remind all participants to fill in and submit the feedback form that already shared by the committee in the chat group in order to obtain the e-certificate and speakers material. We have now arrived at the final session of this webinar. On behalf of the Tax Education and Research Center, University of Indonesia and DTTC Fiscal Research, we once again thanks all of the participants for joining this webinar. And our special thanks goes to our resource speaker, Professor Adrian Sawyer, Pak Dhani Septriadi, Pak Yor Arsal, and Bu Christine, our moderator. And our high appreciation goes to Pak Suryo Utomo, Director General of Taxes, Ministry of Finance, that has delivered the keynote remarks. We once again apologize in any inconveniences, and we hope to see you again in some other occasion. Thank you very much. Stay safe and have a wonderful day.
Thank you. Bye-bye.
Thank you.
Bye. Bye. Thank you.
Terima kasih Bu Christine ya, Pak
Terima kasih
Dhani.
Pak Yon.
Thank you, Pak Yon.
Pak Dhani, Adrian.
Thank you, Adrian.
Have a nice day.
Pak Adrian.
Bye. Thank you.
Bye.
Thank you semuanya Bapak Ibu.
Ya, thank you. In live.
Okay. Bye.